Hi, I'm Alex, welcome to the channel and thanks for tuning in. So in today's video we're talking about HITID again, but specifically the acquisition of Dank Stop, which was announced last week. As always, we'll cover all of the important considerations for investors in HITID, so this is not one you want to miss out on. Also in this video we're going to discuss something which I've seen people increasingly say regarding HITID and its lack of defensibility versus Amazon should cannabis be legalised federally in the US. Now this is important when thinking about HITID's online strategy, and it's something which I haven't really seen discussed online properly yet. And so it's definitely something that we as investors in HITID should be thinking about. I also have a load of things coming to the channel over the next week or so, both HITID related, covering things like updates on the bear case, price targets, a market dynamic in favour of retailers which nobody's really talking about, as well as other stocks as well which we've talked about on the channel, including Golden Nugget Online Gaming, PaySafe, as well as some new stocks to the channel. Please, as I always ask in our battle against clickbait on YouTube, can you smash the like button? It's so helpful for the channel, and since it was hacked there's been a notable impact on it being shared by the algorithm. It would be massively appreciated if you could support the channel in this way. If you're new to the channel and you like investing related content, then make sure you're subscribed. And if you want to see more private content, then check out the Patreon. And as always, I'm not a financial advisor. This video is purely for educational and entertainment purposes only, but let's get straight into it. So first things first, is the deal accretive for shareholder value? Said differently, does this deal create value for the combined group or does it destroy it? Now this is key when executing an M&A-led growth strategy because any company can acquire a load of companies at super high valuations which are not accretive for the overall company value. We as investors don't want to be invested into a company which does this, and so this is the first thing we should look into with any company that's making acquisitions. So in this case, we know that HITID paid $3.85 million for Dank Stop. Now 100% of this was paid for with HITID stock, and this is another important dynamic which we have discussed loads before, but I'll come back to this in a moment. So Dank Stop is generating around $3 million in revenues. The official press release states over $3 million, but conservatively here, for this analysis, we'll assume it's just $3 million. The press release also states that Dank Stop is generating low double-digit EBITDA margins. Let's assume for the sake of this analysis that is between 10 and 20% EBITDA margins. This equates to an acquisition multiple at the worst case, assuming the 10% margin of around 12.8 times EBITDA, and if the margins is closer to 20%, then the acquisition multiple would be around 6.4 times EBITDA. Now the important quick check to confirm whether this is an accretive acquisition, and said differently, whether this is good news for investors, is by comparing the multiple which HITID is currently trading at to the acquisition multiple. So currently, at the time of filming, HITID is trading at around 23 times EBITDA. Now as this multiple is higher than the multiple which they've acquired Dank Stop for, this ultimately means the deal is accretive or it's creating shareholder value. Now we mentioned it briefly earlier, but the full consideration for the deal is being paid in HITID stock. This means that HITID contributes no cash to the transaction, and it's a good sign that the selling shareholders of Dank Stop have really good faith in the potential combination with HITID. They don't at all want to de-risk their position by taking some cash now, and they're entirely committed to the group going forward, and they believe they can create greater value from this. Now one other consideration here too is how the deal was originated and identified. So Dank Stop is actually already an existing supplier to HITID's dropshipping platform. Now this is important because it is an existing relationship, and it would have been very apparent that there were clearly significant synergies which could be generated from a partnership here. Originating new deals in this way gives HITID a very differentiated position. It will enable them to do off-market deals which can be done at cheaper valuations, and in turn which create more value for shareholders. So financially it all makes sense, but the strategic rationale for any acquisition is also important too. This deal clearly has a strong strategic rationale. It adds to HITID's already impressive and growing online presence, where they command the largest platforms and the greatest number of customer contacts. Now while this clearly does have great value now, there's also enormous potential that with federal legalisation comes a great opportunity for HITID to drive cannabis sales online too. Now with its existing footprint, it will be positioned extremely effectively to be the largest player in the market. The Dank Stop acquisition actually also adds an additional 200,000 customers to the platform, and all of this provides quite a unique data and insight which HITID has on consumption accessories, CBD and other areas of the cannabis space. Now this data alone is monetizable, and personally I think HITID is sitting on a goldmine in this regard. Now there's another dynamic to consider as well, and it's something we have seen in most of HITID's other recent deals too, and this is that the founders and the key management of the acquired companies stay on with HITID post-acquisition to help drive the growth plan going forward. Now this dynamic is the same here too. Both co-founders of Dank Stop are taking executive roles with HITID with the responsibility for driving growth in the US. Now this is also so important to have executives which are held accountable for specific things and for specific strategic goals that the company has. Now, as with all deals where there is a clear strategic rationale, there's also a great potential for HITID to generate synergies from the deal, both revenue synergy through cost sale and cost synergy through eliminating duplicated costs. Now clearly, both of these are very good for investors too. This means that while the business currently is generating low double-digit EBITDA margins, under the HITID ownership, there's every chance we could see the margin be driven much higher, say even closer to the 40 to 50% margins which we have seen in other e-commerce based companies which HITID has acquired. Now, one thing that we need to address, which is really important and which I'm seeing increasingly asked about, is the risk of Amazon entering the market and destroying HITID. Now, there are certain dynamics to this answer. Firstly, I do think it's actually fairly unlikely that we will see Amazon do anything until well after the federal legalization debate has concluded and cannabis is legal across the US. By this point, it will be at a big disadvantage versus other companies which have already been working to establish a position to capitalise on once that opportunity becomes real. HITID being a prime example of this. Now, clearly this won't stop Amazon if they want to enter the market from doing so. But what is also important to remember is that as of Q1 2021, 55% of sales that were made on Amazon were fulfilled by third parties. What that means is that other companies are selling their products through the Amazon platform rather than Amazon being the proprietary seller of those products themselves. Now this is a steadily increasing trend from 2013 when it was around 40% of sales, and this is clearly going in one way. Now HITID's model and strength already established from its existing online presence in the US does position it well to capitalise on this opportunity should it become a market which Amazon does want to address. HITID can clearly sell products through Amazon's platform as a third-party seller. Another really important consideration here is also in relation to the brand strength that HITID has through its e-commerce brands. Whilst Amazon is great for speed and efficiency, there are certain products which you will always seek from specialists, be it for superior quality, greater clarity, or detail on exactly what the product is, or whether it's just for greater assurance around quality of service and other factors. HITID owns some of the largest, most trusted and recognised brands in the space, and these can easily be leveraged into selling actual cannabis when it does become legal in the US. Anyway, thank you so much for watching. I hope you enjoyed the video. If you did, please smash the like button. If you're new to the channel, make sure you're subscribed. And if you want to see more content, then check out the Patreon for the private Discord and live video calls. And as always, please let me know your thoughts and comments in the comment section below. I find it so interesting to hear all the thoughts and perspectives, so please get involved. Thank you so much for watching, and I'll see you in another video.